Alphabet is currently trading at a price of $2,435.13 per share. It's up around 1% today, trading with a market cap of $1.66 trillion. The PE ratio just 30.8, no dividend, and a 52-week high, which is currently at of 2,436. Technically, it's about 90 cents down from that right now as of this recording. 52-week low, it's significantly up from $1,351.65. Trading under the ticker symbol GOOGL. Google, just an abbreviation there, and it's trading on the NASDAQ exchange. Over the past 5 days, Google has experienced an increase in its stock price of 7.27%. Over the past 6 months, it's experienced an increase in its stock value of 37.21% year to date, 41.07% over the past year, a whopping 73.7%, and over the past 5 years, it experienced a return of 245.78%. Hello, everybody. This is StockerFinance. I am your host, David Scheuer, and this is YouTube, Google's growth gem. It's going to be a slight Google stock analysis, but we're really going to be focusing on YouTube as the main catalyst for this video and for Google's growth prospect. Twitter.com/StockerFinance for more information. Check out the newsletter, link below on the pinned comment. Google's fundamentals. Before we dive into YouTube and talk about that growth catalyst there, and really what I think is one of the things that's really going to, just continue to propel Google's growth and its momentum overall. But before we dive into that, let's go ahead and just talk about Google's fundamentals and decide whether this company is financially healthy. That it does have an outstanding market cap of $1.66 trillion. I would expect it to be a fairly healthy company, but you really never know these days. Revenue increased 34% from year over year. We're looking at the Q1 2020 financial highlights, by the way, which was reported, or the quarter ended at least on March 31st. Increased revenue to $55 billion just about, and an increase in operating income to $16 billion. That's a 30% operating margin, increased to 30%, my bad there. Income, just other income as well, increased to $4.8 billion. Net income increased from $6.8 billion to $17.9 billion. Just outstanding. Diluted EPS, now up and outstanding. I mean, it's crazy how much they increased on a year-over-year basis. The diluted EPS here up from $9.87 to $26.29 as of March 31st, 2021. Now let's go ahead and break its revenue segments down here. You were using hypercharts.co. Google advertising did not make any money here. We're looking at Google search and other, $31.879 billion. YouTube ads, $6 billion. Google network members properties, $6.8 billion. Google Cloud, a whopping $4.047 billion. Another one of Google's great growth prospects. There's Google Cloud competing with the likes of Amazon and Microsoft as well as I would say Alibaba, although Alibaba is operating in the more of the Asian hemisphere, which Google does not necessarily operate in at all, especially in China. It does not operate in. Google Other is $6.494 billion. Other bets, $198 million, and it had a hedge loss of $109 million. Not too concerning there. Total revenue of $55.314 billion. Slightly down from the previous quarter, significantly up from Q3 2020, Q2 2020, and especially Q1 2020, as we just looked at previously. Revenue and operating income, again, revenue slightly down, but from the previous quarter, but up from Q1 2020 to $55.314 billion. If we look at gross profit, just above $30 billion there. And if we look at net income here at $17.93 billion, it's been increasing for the last 4 quarters in a row. We go ahead and look at its profit margin, which is just outstanding, of 32.41%, continuing to increase quarter over quarter for just about the last 5 quarters. Operating expenses decreasing from the last quarter, remaining slightly steady here. Nothing too worried about. Majority of it is R&D, research and development, $7.485 billion in research and development. Sales and marketing, $4.516 billion. General and administrative, $2.773 billion. They cut back their general and administrative costs just slightly, but it stayed relatively even. European Commission fines, that's pretty funny. Nothing for a while, but back in Q1 2019, that European Commission fines, and a very large one in Q2 of 2018, and another in 2017 Q2. Google always getting itself in trouble with the European Commission. If we look at growth here, year over year, 34.39% revenue growth, as we saw previously, with operating expenses growth just around 5% there. Revenue is growing significantly faster than that of its operating expenses. If we look at its PE ratio, you'll see its PE ratio is only 30.8, making it a fairly valued company in this day and age where tech companies tend to have ridiculously high price to earnings ratios. But if you compare that to Microsoft, one of its competitors here, especially in the cloud business at least, we have a PE ratio of 35.01. Amazon also operating in the cloud business and just a tech company as well with a very high PE ratio compared to that of Google. It's more than double it, of 63.75, signaling that either Google is simply, maybe doesn't have its stock doesn't have the same draw as Amazon, or simply has a lot of room to grow. And if it is going to be valued like these companies, Amazon's cloud business is massive. If you didn't know that, you should check out AWS, Amazon Web Services, and just take a look at how massive it is, because it's really one of Amazon's large parts of its business. But as Google's cloud business continues to grow, I could see Google's business overall to grow, and it starts to be valued like Amazon or Microsoft as well. We'll see its stock start to follow and increase further, at least for its cloud business is what I'm saying. Now let's talk about YouTube valuation and growth. At the beginning of this video, in the title of it, I mentioned that YouTube is Google's growth gem, along with Google's cloud. But for this video, we're really going to be focusing on YouTube's valuation and growth prospect, because I think it's actually been relatively overlooked over the past few years. YouTube essentially has a monopoly, and we'll talk about that in a little while. But anyways, let's just talk about YouTube's worth today. Well, it was acquired by YouTube for $1.6 billion back in 2006. It's estimated to be worth up to around $170 billion, at least in 2020. That's over 100x return under 15 years for Google. That's a phenomenal return for Google. That was an excellent acquisition, and they've really executed well with the platform and attracting viewers, as well as completely eliminating competition as well. If we go ahead and look at the revenue here, they did $55.314 billion in revenue. I've mentioned it a few times throughout this video now, but the reason I'm reiterating that is that's an insane amount of revenue, and especially if we compare that to Netflix right here. This is Netflix. They just did $7.163 billion in revenue in Q1 2021. And if we compare that to just YouTube's revenue, as we saw previously, YouTube did about $7 billion, just slightly under the revenue that Netflix did. So YouTube's revenue is almost the same of all of Netflix's revenue. And if we value Netflix the same as YouTube, as I'm going to show you in a little bit here, you'll see that Google definitely has a lot of room to grow moving forward. What YouTube only has a fraction as many subscribers as Netflix. But again, if we look at the billion hours of video per day that YouTube gets compared to Netflix, which is only around the 400 million hours a day, YouTube has so much potential there and so much room to capitalize on those hours watched per day. If we look at Netflix here, a PE ratio of 59 with the market cap $216.06 billion. YouTube, on the other hand, have very similar revenue to Netflix. And if we begin to value YouTube with the same valuation as Netflix, considering the fact that they're very similar companies, in that someone, you log on and you watch media, and they're essentially competing for viewing time as well, we can make an argument that YouTube is most likely valued around $200 billion as of today. It could be valued much higher than that going into the future, depending on how they capitalize on those hours watched, especially expanding into other places. I know there was a major expansion throughout India, as we saw lots of Indian YouTube channels start to pop up all over the place. And with the massive population there, as they become more tech savvy, as India continues to be a developing country overall. I wouldn't say it's even necessarily a developing country. It's fairly developed in the major cities, at least, although it continues to have room to grow. As its economy continues to grow as well, that's going to directly benefit YouTube, and I believe YouTube will be very highly valued. I was just kind of using Netflix as a reference point here. It was really all I was doing to sort of get a grasp on where YouTube's value lies, especially since Google has so many different segments to its business. It's hard to value the different segments individually. Now, YouTube is also poised to overtake Spotify's music's biggest bankroller. On top of that, it has the fastest growing subscription service out there. Of course, it's on a percentage basis, so that is kind of relative. I wouldn't say YouTube's subscription service is the most widely known service of all time. Disney Plus, Netflix, the other streaming services, Spotify, etc. We have a lot of subscription services out there, but YouTube does have one that continues to grow very rapidly. On top of that, YouTube's revenues are on track to double from 2019. With a great ad biz comes great responsibility. That's very true, and I can see YouTube definitely starting to capitalize on its advertising model, expanding its advertising in many different ways, with mid-roll ads, post-video ads, non-skippable ads that everyone hates, etc., and being better at stopping people from using ad block. Not gonna lie, I love using ad block, but you do have to support your creators by watching those ads. That's how people get paid. And if YouTube can combat those types of things, it will benefit from that as well, which it has been trying to do, although I wouldn't say it's been trying very hard. Competition. Let's talk about the competition YouTube has really quickly at the end of this video. Well, it has none. Let me just be frank here. YouTube has an effective monopoly on the video streaming service. And if we look at, think about it. Really, what else is there? You have Vimeo. I don't know anyone that actually watches Vimeo. Occasionally I'll click on an interesting video just from a Google search or something, but even then, I'm using Google to find that video. If Google wanted to, it could completely eliminate Vimeo from the surface of the earth just by changing some algorithms, changing some of its search functions. And I'm not surprised if that's actually what's happening as well. So YouTube has a complete effective monopoly on the video streaming service, at least the free video streaming services. And I don't see that changing going into the future. Of course, you have, non-PG sites that are also very large, but YouTube, in a sense, has an effective monopoly on the video streaming services, and that's extremely powerful, and it's going to continue to monetize that. And they've really, although they had a problem with being profitable in the past, they've now learned how to effectively monetize, how to effectively, get advertisers. On top of that, we're seeing advertisers say, wait a minute, the viewers on TV are dropping drastically, the viewers on YouTube are increasing drastically, and one reason you can see that, you can see tons of mainstream media, a lot of the big news sites, a lot of the late night shows all have YouTube channels now, and many of those YouTube channels get significantly more views than they're showing on live television. So that is one thing for YouTube. It has a huge competitive advantage and an effective monopoly on this marketplace. And I think that YouTube's going to continue to grow rapidly into the future. I think its revenue will continue to grow. I think it'll become a bigger and bigger revenue segment for Google. And I think it's going to continue to drive Google's growth, making Google an excellent growth stock moving into the future. Is Google a drastically undervalued company because of that by any means? Not necessarily. It is valued, I would say, relatively fairly, especially compared to competitors. Maybe slightly below the value. Of course, if you compare it to Amazon's valuation, you could say it's slightly undervalued. But it just depends on what valuation and what PE ratio you use, et cetera, et cetera. There's a lot of different things that go into that. But anyways, I'm going to stop randomly on here. I hope that you enjoyed this video. I know it was a brief summary. Let me know what you think of YouTube and Google just Google as an investment, and let me know what you think of YouTube moving into the future. If you think it really has that much of a growth prospect, do you see it ever losing this effective monopoly, or what other comments you have? Thanks for watching. Please subscribe. Twitter.com/StockerFinance for more information. Check out these videos as well. The newsletter will be in the link below. You can subscribe to that. It's a once per month newsletter. Anyways, guys, I'll see you in the next video. Peace out.